Welcome, aspirants. If you're prepping for banking exams, you know digital finance is a massive topic. So today, we are breaking down the RBI's brand new framework for digital banking channels. And trust me, understanding these rules isn't just a good idea, it's absolutely critical. They are packed with potential exam questions.
So here's our game plan. We're going to walk through this logically, section by section. We'll start with the basic definitions and build up to the big rules for banks, and of course, wrap it all up with the key takeaways for your exam. By the end of this, you'll have a super clear, structured understanding of the whole thing.
All right, let's start at the very beginning with Section 1. Before we can get into all the complex regulations, we have to be crystal clear on what the key terms actually mean, and, super importantly, when all these new rules officially kick in.
Okay, get your notes ready for this one. January 1st, 2026. This is the effective date. It's a simple fact, which, makes it a perfect little nugget for a multiple choice question. So make sure you star this one.
So, first up, what are we even talking about? Digital banking channels. This is the big umbrella term the RBI is using. It pretty much covers any digital service a bank offers, from their main website to their slick mobile apps. It's the whole digital shebang.
Now here's where it gets interesting. The RBI splits these services into two different types. This is the first one, the view-only facility. Think of it as the basic tier. You can look, but you can't touch. You can check your balance, download a statement, but absolutely no moving money around.
And then we have the transactional facility. This is the full-service, all-access pass where you can actually transfer funds, apply for loans, and manage your finances. So remember this distinction, view-only versus transactional. It is the absolute core of this entire framework, and as you're about to see, the rules for each are just worlds apart.
Okay, so now that we know the two types of services, let's dive into Section 2, the rules for the banks themselves. What does a bank need to do? What do they need to prove to the RBI before they can even offer these digital channels? This is all about what we call prudential rules and bank eligibility.
The RBI has basically set up two different lanes here. The requirements for offering a simple view-only service, they're pretty straightforward. But if a bank wants to offer the full transactional facility, well, the regulatory hurdles get much, much higher.
Now, just look at this slide. The jump in regulatory scrutiny is huge. For view-only, a bank basically needs a core banking solution and IPv6 support, and then they just let the RBI know. But for transactional, no way. They need prior approval from the RBI, and they have to prove they meet strict rules on capital adequacy, net worth, and technology. And it makes sense, right? The risk is so much higher when customers can actually move money.
Now, to help you remember these 5 key criteria for a transactional license, here's a little mnemonic that might just save you in the exam hall. CLEVRE. Clever regulators now find solutions. That's for CBS, RAR, which is capital adequacy ratio, net worth, financial capability, and a satisfactory track record.
And you have got to remember this term, the GAICA report. This is a mandatory compliance document. It's where a bank has to assess its own systems against the RBI's rules. And the really crucial part? It has to be certified by a government-approved cybersecurity auditor from CertIn. That's a key detail.
So getting that approval is just the first step. It's not a one-and-done deal. In Section 3, we're looking at the mandatory technology standards. The RBI makes it incredibly clear that compliance isn't a one-time check. It's a continuous, ongoing obligation.
Now look, you don't need to memorize the full titles of these for your exam, so don't panic. But you absolutely should be aware that banks offering these services are bound by these 5 key RBI master directions. They cover everything from IT outsourcing to cybersecurity and, of course, fraud prevention.
All right, after all that heavy technical and regulatory detail, Section 4 brings the focus right back where it belongs, on the customer. Let's look at the specific rights and protections that are built into these new rules for you and me.
So this compliance doesn't exist in a bubble. To protect us, banks have to follow a whole suite of laws. You've got KYC and AML norms to prevent money laundering, the PSS Act for payment systems. But for your exam, the one I want you to circle in red is the newest one, the Digital Personal Data Protection Act of 2023. This is a massive deal in data privacy, and it's almost guaranteed to be a focus area.
These guidelines are all about transparency and empowering you, the customer. No more hidden clauses and fine print. Banks need your explicit yes. The terms have to be in simple, easy-to-understand language, and you have to be told about all the risks and charges right up front.
This is a critical point for your exams and, honestly, a huge win for all of us. A bank cannot force you to sign up for their mobile app just so you can get a debit card. The choice is always yours, and services cannot be forcefully bundled together, period.
Okay, a quick but really important point here in Section 5. With all these new rules coming in, you might be wondering, what happens to all the old circulars and guidelines? Well, the RBI gives us a very clear answer.
The key takeaway here is one word: simplification. This document is now the single source of truth. It repeals and replaces all those scattered older guidelines, creating one single harmonized framework. For banks and regulators, this is a major cleanup of the rulebook.
All right, we've made it. Now for the most important part. Let's consolidate everything you need for your revision into one final summary. So pay close attention. This is the stuff you absolutely need to know. This slide right here is your ultimate revision checklist. Seriously, screenshot this, write it down, commit it to memory. These are the high-yield facts, the keywords like GICA and the DPDP Act, and the core concepts like no bundling that are most likely to pop up on your exam. If you master this slide, you'll be in great shape.
And there you have it, a complete breakdown of the RBI's new digital banking rules. But it does leave us with a big question to think about. As these rules streamline everything, how will they balance accelerating innovation with the heavy compliance burden, especially on smaller banks? That's really the key challenge for India's digital banking future. Good luck with your preparation.